Now, everyone knows that real estate has been one of the best investments that you could have made over the past decade. Now, it really doesn't matter which part of the developed world that you're in. You could be in London, you could be in New York, Miami, Las Vegas, Seattle, any part of California. Real estate has proven to be a great investment over the past decade. But what if I told you that the hottest real estate market in the world right now isn't in Seattle, it isn't in New York, it's in the Metaverse? I know that many of you may be thinking that's absolutely crazy, but it's absolutely the truth. Real estate in the Metaverse has been reaching all-time highs, and some of these properties are selling for millions of dollars. Now, when we think of physical real estate in the real world, physical real estate is usually bought for a couple of reasons. It could be bought for a primary residence, or it's usually bought as an investment property, either by an investment firm, a pension fund, or a family office, or just as for an individual like myself as an investment property, maybe a rental or a summer home that you want to Airbnb or VRBO. But real estate in the Metaverse is being bought for many of the same reasons. It's being bought for storefronts, places where you can play, places where you can shop, and simply just as an investment that investors can buy, hold, and sell at a later date for a higher price. A growing number of investment firms and individuals are acquiring digital land in worlds like Sandbox and Decentraland. Now, Sandbox and Decentraland are just two of the major players in the metaverse or virtual world space, and investors are betting that people will want to take on real life pursuits within these metaverses. People will want to shop, they'll want to attend a concert, they'll want to learn, they'll want to play. They will want to spend money on virtual homes and retail space, and that the value of these properties within the metaverse or within these virtual worlds will increase as more people join these virtual worlds. Yesterday, a company named Republic Realm, which is a company that develops virtual real estate within the metaverse, said it paid $4.3 million for land in the World Sandbox, and it's the biggest virtual real estate sale publicized to date. And that $4.3 million acquisition broke a record that was just set last week by a subsidiary of a Canadian investment firm, Tokens.com, which said it paid $2.5 million for land in the World Decentraland's Fashion District. The CEO of Tokens.com, his name is Andrew Kegel, I believe, he's quoted saying that this is like buying land in Manhattan 250 years ago as the city is being built. Now, if you saw my video from yesterday in which I explained what the metaverse is, the metaverse is literally going to be a digital world, but we can do everything that we do in real life within the virtual world, or also known as the metaverse. And these virtual worlds like Sandbox or Decentraland are unique, and they're often created by video game developers, and they often include cities where users can stroll shops, and where they can buy a new winter coat, or where they can buy paintings to hang on the wall in their virtual home. I mean, these digital worlds feature apartment buildings, they feature lounges where people can hang out with avatars of their real life friends. And the participants in these virtual worlds use cryptocurrencies to pay for these items. So you can buy a yacht, you can buy a car, you can buy a house, you can buy real estate. Pretty much all of the flexes that you would do in real life, you can now do in the virtual world, and people are doing it, and investors are following the metaverse like crazy. And when we think about real estate in the metaverse, it's no different than the physical world. People want to be close to their friends, people want to be close to their family, and people want to be close to things that they like to do, whether that's shopping or whether that's going to concerts or being close to live venues. Ladies and gentlemen, the world is changing. And if you're wondering how this ownership of land or cars or pretty much anything that you can buy in this virtual world is recorded, well, it's done through NFTs or non-fungible tokens. And these NFTs pretty much serve as de facto deeds which show proof of ownership within the blockchain, and these property sales are usually done in a cryptocurrency that is unique to each metaverse or each virtual world. And if you follow the crypto world or the metaverse world, you know that many of these virtual worlds and these metaverses are being created, and that makes buying the real estate within these virtual worlds really extremely risky. Now, even though buying property in the virtual world seems extremely rewarding when we see all of these headlines where people are paying millions of dollars for random properties, these investments are still rather risky, because if a certain virtual world falls out of favor or if people stop visiting that particular virtual world, those property values can fall to zero, and they can fall to zero pretty quickly. And prices of real estate within these virtual worlds can also be slammed by the volatility of the underlying cryptocurrency. You see, when you buy a piece of property or any goods or service within these virtual worlds, you're often using cryptocurrency to pay for these goods, services, or real estate. Now, let's say that I buy a building or a plot of land for 2 or 3 Ethereum. And right now, Ethereum is trading at around $4,000. But if Ethereum goes down to $100, that's a fundamental risk that, I'm willing to take when I buy a piece of land or property or goods or services within these virtual worlds. And that's a far cry from physical real estate, because even when physical real estate properties go down, there is still some intrinsic value that is there. But the fact that you can buy virtual real estate and you can hire an architect or a game developer to build your real estate or create a game within your own shop or retail venue that you own, it's completely boggling my mind. I'm still trying to wrap my head around it, and I'm trying to do my best to explain it to all of you. But one of the best examples that I like to use when I explain the metaverse and shopping or buying things within the metaverse is using a physical mall, right? Today we go to a physical mall, and within that mall we have hundreds of different retailers. You have things like the Gap, you have different jewelry stores, different retailers, Macy's, Nordstrom's, etc. Now, let's imagine that if you went to the mall in the physical world, that each one of these shops only accepted their own proprietary cryptocurrency. Now, some of these malls or some of these shops may accept the same cryptocurrency, but let's say that you had to go and carry 10, 15 different currencies just to shop at these malls. Well, that's sort of how the metaverse is today. Now, there are different virtual worlds, there are different NFTs being sold, and there are different places where you can invest and buy goods and services, but each one of these places usually accepts a different type of cryptocurrency. And I think that's the mall example is a great way to kind of wrap your head around this whole thing. And just generally speaking, anytime you have a kind of a market boom where you have a lot of participants kind of coming into one category at once, let's take the electric car world, for example. I truly think that we are moving into a world where the winner doesn't really take all, but the winner takes most. So as of right now, you're seeing many of these virtual worlds and many of these cryptocurrencies that are being created and adopted. But at the end of the day, 10, 15 years from now, I think we're gonna live in a world where there's just a few left. I think right now there's just a huge craze and people are building like crazy because it's just the way the world works. Tokens.com, which is publicly traded, is currently developing an 18-story skyscraper in Decentraland that it hopes to lease to lawyers or cryptocurrency exchanges, which can use the building for events or advertising. And it's also looking to develop properties on the land it bought in Decentraland's fashion district, which it wants to rent out to fashion companies as event and retail space. Now, thinking here is that you can create something similar to Rodeo Drive or Fifth Avenue in New York City, where when you go to those places, you know that you're gonna shop, you know that you're gonna do high-end shopping. And we're moving into a world where the younger generation, I think the time period of buying, diamonds and buying watches and buying expensive cars, like that could honestly be a thing of the past. I think the biggest flex going forward is kind of like the digital assets that you have in your wallet. Like what NFTs do you own? And going forward, that's gonna be how you flex, and that's gonna be seen as how you kind of show off what you have. Well, ladies and gentlemen, I made this video to show you guys that the virtual real estate world is booming, but it does come with its risks. But if we really think about this strategically, I think this is an area, and the whole metaverse thing, it's real, like it's going to happen. But I think we're in a time period right now where there's many players kind of entering the market, but I think it's gonna be a winner take most situation, not a winner take all. And what I mean by that is right now there's hundreds or perhaps thousands of players coming into the cryptocurrency and creating their virtual worlds. But I think at the end of the day, when we look at this from 10, 15, 20 years from now, at least to me, it seems like there's only gonna be a few established players who remain after this quote unquote, war to create metaverses and virtual worlds is all done. But just as with any other investment, there are risks associated with buying virtual real estate or virtual NFTs or virtual goods. I mean, it's no different than real life. The metaverse is a digital real life. But Anyways, with that, I'm gonna call it a video. Thank you all for watching. Please remember to like this video. Please remember to subscribe to my channel. I'm out. I'll see you guys next time.